Good morning. Welcome to Tricky Tuesday.
Morning.
How is everybody today?
Oh,
Oh, hey, Scott, are you just down the road or did you go to Hawaii?
yeah, I've
I'm
been there
s-
before.
I'm still home, but I'm getting ready to go on a
Where
trip.
you going? Where you
Good
going?
morning, all.
Hello.
Just going down to Corpus Christi
Where you
for
going?
December.
Where to?
Corpus Christi.
Last time you did that, you had to buy a new truck, didn't you?
Well, yeah, similarly. Yeah.
Hopefully not.
Hopefully
Hopefully
we
not do
try
that
it
again.
again this time.
Yeah. Yeah, I remember that was a couple years ago, I think.
Yeah, 23.
Yeah. Okay. Yeah, I remember that pretty well.
Good times.
Yeah.
Good Lord, that's that long ago?
It was a couple years ago. I'm surprised my brain remembered it, but
Yeah.
But
Thanks
Scotty's
for
been Scotty's
thanks
Scotty's been
for
with us.
poking
He's
mine.
been with us a long time. When there was only like four of us talking all the time.
Yeah.
Right. All right.
All right,
Well,
let's
get
get
rocking here.
rolling. Woohoo! Party just keeps going on. The NVIDIA week continues, is what I'm thinking today. And I was thinking yesterday maybe, we'd have a couple of calm days just being flat, but there's just too much out there rolling around. And the Dow Jones yesterday went down 557 or 1.18%. The Nasdaq down 299 or down 1.31. S&P was down 61 or 0.92%. We had advancers. 21% of the stocks advanced, 76.4 decline. That's 5 days in a row of advancers lower than decliners. Decliners actually racing advancers. That's negative market breadth. Only 18% new highs, 81.3% new lows. Stocks greater than the 50 day moving average is only 29.9%. Greater than the 200 day has dropped down to about 44.6%. So market breadth continues to head down, which makes it more tricky to trade for sure. And I said this week, I'm in no hurry to trade. I said it yesterday with this NVIDIA and with what we're seeing in market breadth continue to go down. And you can see today we're down again another 360 points on the Dow, 34 on the S&P, about 160 on the Nasdaq. Bitcoin's broken down a little bit, and the cryptos are open 24/7. So you normally would expect that. It started over the weekend. Now we're seeing it, in my opinion, move over into the equities market. One thing we haven't seen, crypto is pretty highly leveraged, and so is the equities market. We just haven't seen the contagion of those layers collapsing on each other when margin calls come. So hopefully it doesn't come to, we have a big trip in the downside. The algos start selling, and we start seeing those margins getting called, and it just keeps piling on each other. And hopefully we don't see that. A couple other things. Blue Owl is a private credit lender. It's down this morning, 6%. There's concerns. We talked about it the other day. Concerns about it. Heavy lending related to the AI data center buildouts. We're going to see a lot of this. We've been starting to saw it in the subprime auto loans. We're seeing it in delinquencies on credit cards. We've been talking about this for months, so shouldn't be a surprise to anyone on this channel. And sometimes that just starts rolling up and people start taking notice. We noticed it months ago. The video was down yesterday 2%. They're worried about stretch valuations. And they're also worried about, even if NVIDIA comes out and said our sales are up, what's the ROI for these companies buying all this NVIDIA product? When are they going to be able to pay back all these millions and billions that they're spending on this AI? So that's coming into the psyche. If you're on Cloudflare, you might be having issues today with your internet. I think X is down right now, according to what I've seen. I don't have an X account, so I don't know. I've tried to get in a couple financial sites and I couldn't. What's that?
Yeah.
Cloudflare.
X is having problems as well as our website since late last night. I noticed our host was having an issue, and then this morning the problem was with Cloudflare out of Atlanta. So they're having some issues when it comes to. I think they're probably getting hacked. So their systems are
Here's a
shutting
good
down.
one. I can't log into my LastPass, but has all my passwords.
Yeah,
Because
that's not good.
I guess it's hosted on Cloudflare.
Wow,
Well,
that's not good.
Cloudflare is the cybersecurity wall between your host agent. So
Yeah, we use it. Even in our own website, we used to use it. We just switched off of it.
yeah,
Conveniently, I guess.
My passwords are still good. I got them right here in this book.
you just need fire insurance.
Yeah, well, I got safes. So,
There you go.
all right. So the other thing that's coming out, we're going to see a lot of retail result earnings this week, and Home Depot just came out and they missed their EPS. They hit 374 share. Estimates were 384, and they cut their full year's earnings outlook. And I think we have Walmart coming up and a couple others this week. So that's going to tell us how retail's doing. And I think we already know how consumers are doing because we've been talking about it for 6 months, ahead of the game of what they're telling you. And we're going to start getting some reports out of the September jobs report, which I don't even know why they're bringing it out. That's 2 months ago. Really, it's like trying to run your business on a 6 month ago forecast. It's just not, it's just ridiculous. When I look at the sectors, I'm starting to see breakdowns. We talk about the 50-day moving average, and there's 11 sectors in the S&P 500. You can go see they have 11 ETFs for those. We go over them once in a while. 9 of 11 are under the 50-day moving average right now, and 3 out of 11 are under the 50 and the 200. And those 3 are the XLP, the XLB, and the real estate. The only ones that are above the 200 and the 50 right now is XLE, which is energy, and XLV, which is healthcare. So, again, I'm just telling you what the charts are telling me that, we continue to see this fundamental breakdown in technicals, and we'll go over them, take a look at them. Anyway, here's where we're at today. Down 357 pre-market, 33 on the S&P, and 160 on the NASDAQ. Come down, let's see how worried these guys look. Okay, there's your Cloudflare, merchandising, Home Depot, Toyota. Okay, all right, so we got all that taken care of. Let's take a look, and where we are. The only 2 that we've been in still are Berkshire and O'Reilly, and we're still in those on the watch list, and we're up about 1.6. And we'll look at the chart. You can either have a swing trade or a investment on Berkshire. But O'Reilly surprisingly still up about 4%. The others I put on, I said, I'm not really trading this week. These are for you guys if you want to trade. I don't like trading on weeks like NVIDIA week, and you can see why. But if these are the prices that when we put them on the list, and at least these 2 are up a bit.
Are you showing your chart, Mark?
Oh, sorry guys. I am not. Now I am. So Berkshire and O'Reilly from last week, we're still in, about 4% O'Reilly, about 1.5 for Berkshire still. Again, we'll look at those. And had 4 others we put on, Donahue and Danaher and Hershey. I said I'm not going to trade them, but if you guys wanted to, this is the price that we put them on at, that we put them on the chart here. So I didn't trade them or anything, but they're up. And then the 2 that would have gotten out, we had the intermediate resistance level came on, and so I just put in the price where that came on and where it would have been. So Merck would have been out, he'd have been up a little bit, but again, told you yesterday, I'm not trading until this whole NVIDIA thing goes and we see what happens. Just not worth risking my cash on that right now. We come down to the end of the 200, same kind of thing. Amcor, we did get out of Amcor, not small little profit, $9, but it was 1%, but it hit a sell limit, and with the market the way it is, get out. And then the other 3 that were in there, again, these are the prices we put in when we got in the other day. Republic Services up $1 from that. Waste Management, we looked at that on Friday, okay, and that's up 1.69% since we talked about it. And then Verizon, which not Verizon, VeriSign, is down about 1%. But again, wasn't going to trade this week until I see what happens tomorrow after the market closes. I'm not seeing very much good in any of the Mag 7s. There's 2 or 3 that are still hanging in there, and we'll look at those charts. But the market sentiment in the technicals is not looking good for the majority of the markets. So let's go take a look at some charts. It's kind of exhausting, these markets. The S&P, you see, this is, this 50 is held up for quite a while when we go year to date on this chart. It'll let me, since, well, right about here. This is May 1st at 558. It's held on that 50. Done some bouncing off of it. And now, yesterday or 2 days ago, we went down a little bit below, a little closer so you can see. And then yesterday we closed below the 50. Here's your resistance. We've had sideways and we're below the 9. We're below the resistance. And we're going to open up lower below the 50. Now the oscillators haven't looked good. The MACD hasn't looked good since the 4th of November. And we've had crossovers on the other oscillators. So again, I'm seeing technically, a negative breakdown we're seeing on these oscillators. We get below that 50 and we sustain and we bounce and we can't get back up. The next level we're looking at, is 200 down here, and that's at what 613 right now. Okay, on the 200. We go to the Dow, seeing the same kind of thing. It came down and stopped right at the 50. We've had 50s again, but now we're going to open up below the Bollinger Band, below the 50, and the oscillators look, similar to what we just saw on the S&P. Qs, same kind of thing as the S&P. A lot of the same stocks, and we closed underneath it, the 50, and again we're going to open up right on the lower Bollinger Band, and again we go back to about the 4th or 5th of November when we started seeing this fall down. And so these are the way you use technicals, at least in trading, short-term swing trading, to get out, and kind of miss this. If you're doing long-term and you use the 200, you're still doing pretty well. You go back just year to date and see if we have the same kind of thing on the 50. Yeah, right in here where we've crossed the 50, back in May. And you'd still be in it until right now. If you were long-term and used the 50-day, you'd be starting to think about taking some off the table, depending on if that can hold or if it goes under and then continues down. The oscillators are telling us a story that it looks like it's heading down. Now, that's, again, oscillators and probability. If you're in on the 200, okay, you got in about the same time, you're still in, okay? But again, if that breaks through there, this has been a pretty good line, for the indexes. Go to gold. You would think gold and silver would be taking off, with the index or the equities going down, but we're really, here's the 9, here's your resistance. We're going to open up, we're below the 9 again, and crossovers, negative crossovers on the oscillators of gold and silver. That's why I'm just seeing, okay, where would I put money, to go to work right now? And for me, I'm move more into cash, and I'm looking at, dividend payers and treasury bills right now, for me, because I don't want to lose this money, and tomorrow's a big day. So same thing we see on silver, Bitcoin. It'll come up for me. It doesn't want to. Bitcoin now we're down, come back up above the 90,000 level. Okay, we're about 91. If we break through the 90, I mean, we could head down to, the mid 70s, 80s, maybe 82 on the next one. But again, it's just been, down below this 9, and everything's falling down the Bollinger Band. And on this one, we haven't been across the MACD since about 11/1, so about the beginning of November. We'll see if it can flatten out here a little bit and head back up. But right now, we're not really seeing that. And then you look at MicroStrategy, which is leveraged to that. One thing on MicroStrategy is the chart, at least the program, is put on intermediate support level right about where we're going to open up. So we have come down, we've stopped at that level. I'm going to see if it can move sideways and then head back up. That would be a good sign on MicroStrategy, but it follows Bitcoin. So whatever Bitcoin does, that's going to happen. And this one here, you can see we haven't been across the MACD since about the 10th of October. You can see where, you would have gotten out if you're using the, kind of my trading guidelines, and you would have gotten out at, somewhere up at the 330 level. And now we're sitting at 195. So again, technicals are there to help guide us in, decisions on when to get in or when to get out. I use that on the long term on IBIT. I had IBIT since it came out. I told you guys I got out, and once I saw it wasn't going to cross back over on IBIT, and it's been a good decision to get out of that long term and wait. And again, it's just following down price action, the lower Bollinger Band. The oscillators are still negative, and we'll see what happens. And maybe it'll come back up for a swing, and maybe we can get back up to the 200. But I'm seeing a lot more stocks and a lot more indices, ETFs, testing that 50. And here's your 50, and then the 200. So again, we'll see how that all works out. Ethereum finally broke the 200 we were talking about, and it's still kind of on this downward trend underneath the 9. Oscillators are still down. We're sitting at 3,039 on this. We had been across, we just crossed over about the 12th of October or of November on the MACD, and now we're down at the flat level on Ethereum. Let's look at NVIDIA. The NVIDIA, tomorrow is the day after earnings or after close. Again, we're rolling right along. Resistance level, we are just still bouncing off this 50. You can see we fought it, and now we closed right above it, and we got the 50 and the intermediate resistance are just neck and neck. We're already under the 9. We're already under the 20. Let's see if this starts rolling. I mean, the oscillators still negative on us for NVIDIA. Let's go back a year to date and just take a look at that 50. And about the same time, got in about the 1st of May on the 50, and tested it, gone down below it, come back up. It's been a pretty good level of support, but if we break that in sustainable manner, we can't get back up like we did over here, like we did here, like we did here. It's going to be interesting, but we'll all know tomorrow. But the oscillators aren't looking too happy right now with NVIDIA. Meta is one of those below the 50. We crossed below the 50 at earnings and actually below the 200, and we haven't been able to get back since. The nice thing is, just like we saw in MicroStrategy, we have this right where we're going to open right below there is an intermediate support level, and we've kind of hit some support there. You can see we're heading sideways, and the 9's coming down. So I'm going to watch Meta. It's going to be influenced definitely by tomorrow, but we're starting to see the MACD come back up and see if we might get back into a swing and maybe back into an investment, but not yet, but we're just going to wait, and tomorrow's the day. Microsoft, flat, okay, down since earnings, flat along resistance, got the 9, went up above the 9. You're below the 50 on Microsoft. We crossed over there on the 4th of November. Oscillators are still down, and we'll see what happens. We're going to open below again, right at this level, just above the lower Bollinger Band. Google still riding the effect of the Berkshire purchase, but again, we came up, we hit resistance, and right above resistance is sell orders, so really tight levels up here. We've done it several times, wicked up, came back down. We're going to open just a little bit above the 9, but again, I look even with the glee of Berkshire buying Google, we're still not seeing much other than on the momentum indicator, which we have this little gap up here that gave us back above the 50. I'm still waiting to see if we can get the MACD up, but again, everything's just going to wait and see what happens. And even with this nice run up in Google, we're still only right up to where resistance is again. Apple, this is another one that's been doing, the Google and Apple been kind of just riding along resistance. Same kind of chart. I mean, but I come here and I look at the oscillators. It's really not looking good on the oscillators either. So kind of come down 3 days in a row, back to resistance underneath the 9, underneath the 20, or right at the 20, I should say. But we are above the 50 and the 200. on Apple. Amazon earnings came up, everything was good, and then we just started to continue down. We're still above the 50. Okay, we've come down. We tried to bounce off it, and that's exactly where intermediate support is. And then you look at the oscillators, just even on Amazon, and negative crossover on the 14th of November on the MACD. We've done it, prior to that on the stochastic, we're still heading down. Got the 9 heading down. You got the 20 rolling over. We'll see. This 50 again is another level of support, which we have intermediate support. That's right where we're going to open. We'll see what happens with Amazon. Tesla is, down below the 50. Okay. Still above the 200, but this one finally, succumbed 3 days ago. Tried to wick back up, got fought back. Tried to wick back up on Friday, got fought back, and we're going to open up right about below where we closed. And again, you will go back and you look at where we crossed over about the 3rd of November on the MACD. And when you cross over the 9, this is a sign to get out on a swing trade. As far as a long-term investment, if you got in at the 200, you use the Paul Tudor, you're still in. If you use the 50, you're probably out because we've come down. We'll see if it retests, but the 9's coming down, the 20's coming down, and they're all meeting right here at the 50. Palantir, good old Palantir. Had a nice run up to earnings. Earnings came out. Now we've come down. We've tested the 50, and it looks kind of like the last chart we just looked at. It came down. Now we're going to open up right above the Bollinger Band. So again, this 50 level has been breached. If you use that as a long term, it was a pretty good level of support. And we'll go back year to date, take a look, and you can see about the same. Go back in May, end of April, and we were above it. We tested it, and now we finally fell below it. So it's never a good sign when you do that.
Mark.
Yeah.
Hey, Mark.
Yeah.
It's interesting. I don't know if you all have seen the article that Peter Thiel, who co-founder of PayPal, investor in Facebook with a half a million or 500,000 into Facebook initially and turned it into 1.7 billion, recently sold all of his Nvidia position and a big chunk of his Tesla position. And what's interesting is his move to what he bought, and one of them was Microsoft and Apple as well. I don't really understand the Apple trade, but that Microsoft deal, but it was pointed out in a couple of the articles I read was he's also a major investor in Palantir. He is moving to more of a software allocation in his hedge fund that he owns. And I thought that was interesting is that whole shift potential from hardware to software, because we've seen this ramp up in hardware spending. Now, have we topped that out? And if we have topped that out, then what's the next phase? And that is running the hardware, and that's software. And so I'm curious to see how, Palantir hasn't taken the beating as Nvidia has. They're different. One's hardware, one's software. But I'm interested to see if we see this more on a longer term perspective, a rotation from hardware assets to more software assets in the next 18, 24 months or so. So
I talked about that a little bit yesterday about him selling Nvidia and adding Microsoft and Apple. And what they said from the article I read the other day is he thinks Microsoft and Apple have more diversified revenue streams than Nvidia. Nvidia has what they have, and that's it.
Right.
And so
yeah.
And so you're seeing a lot of this. We saw a lot of selling of Nvidia. Even Jensen and those guys have sold. We've looked at the
13 or
what the executives have been doing, and there's not been buying. So again, tomorrow's Nvidia's earnings. So just hang on. Yeah, good point. Thanks, Trent.
Yeah.
We'll go with the watch list. The only things we have left that have been in is Berkshire B, okay, we got above the 200 investable. Here's where I had a sell order yesterday for a swing trade and it didn't hit it, just missed it. Going to be the same today because if a swing comes out, that comes down. I'm going to want out on a swing on an investment. You're still in. Okay, you may come down if you want to try to get out. Right now, if you want to keep your profits, you can see exactly where you might want to put a sell. Maybe right at the 9, for a investment with this kind of market. But we'll see. It's really up to you. I don't like losing money, so I get out. O'Reilly still hanging in there. Here's where we hopped in, and we're still kind of moving in that upper direction. Got the sell orders right above, so I'd certainly get out if it hit that, and then I'd probably put in right at the 20 or a little above, stop and get out of this one today if it comes down and hits that, just because of the way the markets are, and because we have a known market event tomorrow, which is NVIDIA earnings. The others I won't go through. AMCR. This is the one we made a little bit. This is under the 200. Again, came down. I didn't mark it, but it hit a sell order, and we got out with 1%, I believe, 1.08%. We talked about. I didn't get into it, but last Friday, waste management. There's money in garbage because it's still kind of rolled up. It did close down a little bit, but above when we started talking about it, and the oscillators still don't look as bad. We're at 50, a little bit above on the RSI. So if you were in something like this, definitely put in a stop, probably at the 20 here. And if this thing comes down, you get out, but not really in any hurry to get into any of these. One we talked about, someone brought up Friday, PTC was like one of the best, as far as percentage gainers on Friday, but you can see on the chart, all it did was gain back up to the 9, and yesterday it dropped right back down to where it was. So again, we talked about, I'm not sure this is where I'd want to be chasing until the chart told me to. The chart definitely does not tell me to get back into PTC, and what it gave you on Friday, it took us back on Monday. So I don't like chasing these. Lilly, which was really driving, some of the healthcare. There you are. It's hit intermediate resistance 4 days in a row. It's just tough to get past that. We're starting to see some rollovers in the oscillators, and going to just the ETF, the healthcare, you can see the same thing happen 4 days in a row. Come back inside the oscillator or the Bollinger Band, but it's definitely heading down. And then Soundhound, you guys, Soundhound broke below the 200, and we're going to say, okay, for an investable, came back up, wicked up, still under the 200. Oscillators are all down, and now you got resistance right here. So if I were in Soundhound, I'm not. Okay, and I was doing the investable thing on the 200, and I'll go back a little bit, and you would have gotten in at the 200, at 1080, and this 200 didn't have much chance to move on, and so you're out at 1143 ish. So 1080 to 1143, made a little bit on it, unless you did a swing, you got out on the swing, but we're starting to see the breakdown on these 200s. And that's not what you want to see. Real estate. This is the real estate. Again, real estate's down. You would think, with the Fed trying to, cut interest rates, that you would see real estate up, but it's not. That's not what we're seeing. And then I think that's it. If you guys want to look at something, put it down in the chat and we'll take a look. But the main thing I want to emphasize is risk management. And I'm not, there'll be some stocks that'll maybe be momentum stocks that are rolling up with this market, and with your money. Are you gambling with that, or do you actually have a plan that you're following? And from what I see from a swing trade and an investable kind of market, I mean, that's why I pulled into some more cash, and I'm just going to sit and wait and see what happens tomorrow. And let's say everything's happy. It's one stock. It's one stock out of tens of thousands that is going to determine our market tomorrow. But I'm looking at more things beyond that. Trent's been looking at it. We've been looking at the expenditures and the valuations of these stocks. We've been looking at the economy, and and the consumer and what's going on with the consumer. We were looking at the job market. We were looking at the housing market, credit markets, and a lot of it is just not as positive as you'd want to see. You know, it's heading to neutral to negative, and eventually, I know the market is not the economy, but eventually you return to the mean, and the mean is the market is the economy, and it starts pulling down the market. And I'm just seeing signs, and we'll know tomorrow. So anyway, be careful. Trent, over to you, Mr. Preserve, Protect, and Grow today.
That is the theme for the rest of the year. I pound this on the table. So here's the S&P 500. We've had yesterday we closed down 93 basis points, had a swing from the open at a high of 673.71, a low of 662.17, and we closed out at 665.67. We look to open up a couple bucks lower at 662.93. So let's blow this up a little bit. We have put support here. This is where institutions / market makers are putting their hedges in. And there's this floor at 660 just below the intermediate trend line. So we're going to open below the intermediate trend line. That's a cautionary yellow flag that I see. And then we're going to get close to the 660. I wouldn't be surprised if we touch upon this today. And if we go through it, the next level of support is at 650. Your resistance levels are now being priced in at 680, and your bull bear fight line or gamma flip line is at 671. So we're seeing lower highs, and we're sort of crunching at this point. The roof's coming in, but the floor is still staying where it is. And so that could be, it could be interpreted as possibly down the road, if something good comes out, some sort of positive news were to come out, we could see a temporary move higher up towards maybe 671. But it also could be 660 could be jeopardized. I've read a couple things recently. Bank of America, I believe, and a couple of the big banks have come out and said a 10% pullback off the S&P 500 highs should be expected. So I put here what that 10% pullback would look like, and I sort of chuckled because it brings us down to right at 619 on the SPY, the S&P 500 ETF, and our 200-day moving average presently sits at 613. So this Tudor Jones 200 line, 200-day moving average, is really a significant level. So if we see a break below 660, 650, we should anticipate this movement down towards this support level, possibly of the Tudor Jones 200 in the coming weeks. So key points is support at 660. If we can hold there and start to move back up, could see some positiveness going ahead, but we've got levels of resistance at 671 and 680. So keep that in mind as you're risk managing, you're protecting at this point. You're starting to watch as we continue to be below 671, institutions, market makers sell into this. They sell into the momentum downward. Triple Qs, well below the bull bear fight line at 617. Yesterday hit the 600 level, which is a big level of support, hit the intermediate trend line. Thought that was interesting, held up. Today we look to open about $3 lower, right at 600. That's significant. That's interesting. What could break the momentum of this, break this from going down, but moving higher, is some guidance, not earnings. Remember, earnings are rear view mirror views of the past. And the past, a lot of times it can dictate what happens in the future, but it's the guidance that we need to be focused on. And the guidance is what will tell us where these stocks will go. And tomorrow, NVIDIA's earnings focus, I'm going to jump on the earnings call. I think everybody should take a moment to at least listen to it or read the transcript, which you can get off Seeking Alpha, is what is their NVIDIA's guidance? Because that is the biggest boy in the classroom, and when he gets up out of his chair, he's going to wreck some stuff if he doesn't behave. And so we need to look at what do they say during their guidance, during their earnings call tomorrow, and I think that'll determine where things will go in the near future. So IWM, that's the Russell 2000. This is showing strain for a while now, going all the way back to October 27th. We have a big support level at 230, bull bear flat line at 242, and then resistance at 250. Market makers are selling into this downtrend. So let's see if, it looks to open up at 631. So right at this put wall. We'll see if it holds there. If it breaks through that, then you got the Tudor Jones 200 as your next level here. Let's check out the VIX, the volatility index. This represents the volatility within the S&P 500. And today we look to open right around 2373. Up, big day, big candle here move, but we did close off the highs. But we're seeing a jump there. That is suspect. We should keep that in mind. As long as volatility is high, vol control funds, these are the funds that are hired by pension funds, insurance agencies to offset the risk or the volatility within those portfolios. So vol funds go with the direction of volatility. And what you're seeing now is they are going to more of a risk off stance. And so they're riding the volatility wave up. So they're buying options, future contracts on the VIX and other volatility indexes, and which is exacerbating in a way the volatility levels. Now, if we see the VIX drop below 19, that volatility, they will recalibrate to a more subdued portfolio within those vol funds. But this volatility is a big trigger within these algorithms for the CTA funds, is commodity traded accounts. They are taking a more of a risk off stance. They're using volatility as one of their metrics. And then systematic funds. These are the algorithm, the high speed trading funds. When volatility expands, like we're seeing, these guys go into more of a defensive mode. Take into account, they represent a major part of all the trading every day. And they are so sophisticated, they can pivot in seconds, and they do. And that's when you see these spikes in volatility. You see the spikes in the S&P and other stocks as well. Let's go to the bond market. Now, the bond market is probably not on most people's radar. It's not sexy. Bonds are where people issue. We're seeing right now some of the biggest hyperscalers, the big Mag 4, that would be Amazon, Meta, Alphabet, and Microsoft. Of those four, 3 in the last couple months have issued bond offerings. Amazon, 15 billion, first time in 3 years. Meta, 30 billion. Alphabet, 2 offerings, one in April, May, in November as well. The only company out of them that hasn't had a major bond offering is Microsoft. They're still paying for this AI expansion out of cash flow, which should be a sign to you as how do these hyperscalers pay for these expansions? Are they issuing debt, or are they paying it out of revenues? Are they paying out of free cash flow? And maybe this is why a Peter Thiel moves from a NVIDIA and Tesla to a Microsoft, who's still paying for these expansions out of free cash flow. And so keep that in mind as we're looking at this. The bond market is the truth. It is the leader. It's the largest market out there on a consistent basis. You've got the 2-year. This is interesting to me because a 1% move in the bond market on a day-to-day basis, that's a big deal. Not big deal in equity markets, but it's a big deal in the bond market. And you've got today the 2 years down 1 point. The yield, remember, it's a teeter totter. Yields go down, um, bond values go up. And if yields go up, bond values go down. So right now, this is really interesting because since October 17th, you've seen yields go up. So that bond value has gone down. Take an account, I read over the weekend, there's $1.8 trillion in offshore Cayman Island hedge funds that are holding 1.8 trillion in US Treasury bonds. So they buy these bonds, they then take and they borrow money, they margin up on them, and they collect yield. So if you're pulling down, say, back here in June, you were pulling down, roughly 4% on a 2 year bond. You scale that up 10 times. So you have $1 billion, you borrow 10 billion, you scale up, you get a 40% return on your money. That's a hell of a payday. And that's how they manage this. But when yields start to go down, they are forced to then sell. And since October 17th, we have been seeing yields go up. And yields go up and these guys are getting squeezed. Well, it's interesting today, and I started to connect the dots. Over the weekend, over last week, there was an off-book meeting between New York Federal Reserve, Goldman Sachs, JP Morgan, and Citadel. Citadel is one of the largest market makers in the world right now. Okay. They see all flow of trades. They see it all before anybody else does. Okay. They all met. Why do they meet? The only reason these guys meet is because of liquidity squeezes. When liquidity freezes up. And we're starting to see the risk that these hedge funds and other institutions have taken over the last, say, 5 years is now coming to roost. And they're going, wait a second, if we get these guys selling US Treasuries, we're going to see a massive spike in Treasury yields. That's going to cost us more money. We're going to have to, and as especially with Yellen in her 1 to 2 to 3 year time frame when they were issuing treasuries instead of issuing them at 5 to 30-year term maturity rates, a lot of these are coming due, and so this could cause more of a avalanche effect. So I look at this yield drop in the 2 year, the 5 year, the 10 year, and the 30 year today, and I go, that's suspect. Why did that happen? The one thing I think about is who came in overnight and bought treasuries and created liquidity in the market? New York Fed, JP Morgan, Goldman Sachs, Citadel. And that to me is like, okay, if I'm right, and I can be wrong, it's 50-50 chance. If I'm right, then these guys are creating liquidity in the market because liquidity is starting to freeze up. It's like losing oil in your car and then running to the side and throwing oil back into it, even though you really truly need an oil change. The MOVE index, this is the volatility index for bonds. This is like the VIX, but on the bond market. You've seen volatility since October 30th has started to move up. And today we get a 3.6% spike in that. That's significant. If you go back here to November 10th, we saw roughly 6% spike in bond volatility. So I'm sharing this with you because this is part of the preserve and protect phase of the theme for the next till the end of the year. These are things that you look at and you go, why do these happen? And when the bond market spikes, when the yields go down like we're seeing today, in the 2, the 5, the 10, the 30, that should trigger something in your head saying, why such a big move? Why such big moves in these candles? Who's coming in and buying such big chunks of these bonds? Why are they doing it? So cautionary situation, in my opinion. One last thing. We've seen this build out in AI, and it's been paid mostly through private equity as well as free cash flow. Now, at the beginning of beginning of August or so, we've seen now issuing of more debt, so bonds. They're not these a lot of these companies are running out of free cash flow space to finance this stuff. So they're going to the bond market and asking for bond buyers to finance it, to loan it out. That to me is one of those key things you got to put in your preserve protect phase. Why are they doing it? Why don't they have enough to pay out of their pocket? Why is that not happening? And to me, that reminds me of the whole 2019, 20, excuse me, 1999 phase of the dot-com build out. It reminds me of the 2008 financial situation where credit all of a sudden started to dry up. You started to see these kind of bond fluctuations back in those days. Am I wrong? I honestly think 10% pullback for the S&P, that'd be healthy. 200-day moving average, that'd be healthy. You get revaluations would be adjusted. That would be healthy. But beyond that, that's where it gets scary. That's where I get nervous. So when you're looking at your portfolio, and over the weekend, I hope you did this homework because this is what I suggested to you all on Kerry's Friday call. Sit back, determine what that dream is, what that goal is, how much does it cost, and when does that dream getting to that dream get interrupted by a loss in your liquidity, in your investments? At what point? Start to look at these things as we proceed through the rest of the year. Because in the end, if you preserve, protect, you will grow. You will capitalize on this. And I honestly believe the opportunities will be a shift from hardware to software. So look at those Microsoft kind of positions. Look at the companies. Cloudflare is getting crushed today. Our website is down because Cloudflare is down. So if you try to go to the website and you run into that hurdle, that's what's happening. To me, that's another element to these data centers you've got to take into account. They are a target for the hackers of the world, and that's where cybersecurity is really going to come into play. So look at those cybersecurity companies. Probably not a buy today, but down the road, that could be on your list of software companies who could really excel in the next, say, 36 to 48 months. So I'll get off my soapbox. Mark, what you got?
I have a question. It's Mark, will Iran ever come back or is it dead? This is Randall. I'm down over 30% trying to determine if I should cut my losses. Let me put a chart up. If Iran, this has been kind of a favorite of not only the group, but also the market, and it's had a nice run. I mean, I look at it, and again, I'm looking at it from a swing trading point of view, but even as a investment, if you use a plan, and I don't know where you got in on at obviously 30% below where it's at, and what was your reasoning for getting in, number one, and what was your plan for getting out, number two? And you may not know that now, but that's what we try to teach is have a trading plan, have an investment plan, take your emotion out of it. Don't be chasing stocks, follow your plan. And I just look at, from a swing trading point of view, I look at getting in back here, in August and kind of riding it up until I hit resistance here and get out. Okay. And that's the way I see it on a short-term swing trade on technicals. And I look at the technicals now. Okay. And I see, we're below the 9, we're below the 50, and the 50 is a nice level of support along with the 200. And now we're below it. We're kind of pop back up. I'm going to watch these oscillators. Maybe we can get back up above that 50 and it can ride up in a short term. The oscillators don't look that way. If you got in and you use Paul Tudor Jones 200, which is, for me, for an investor, that would be, if it were my relatives or friends and they didn't want to spend much time doing stuff, I would say, put this one line on your chart. When it goes above it, buy. When it goes below it, sell. And you'll probably do pretty well. Not financial advice, but, we see chart after chart, or the 50. So, this is going to follow Iran, what happens, in my opinion, with the AI trade. And if tomorrow NVIDIA poops a brick or doesn't come up to the expectations of the market, it's one stock. We still have the issues of overvaluations of stocks. So we still have the issues of all the debt that Trent talked about that they're taking out. What's the return going to be on that in AI? There's just a lot of uncertainty. I can't tell you, 30%. It'd probably take you about 60% to get back to even. I don't know how much you have in it, what your financial situation is. I'm not a financial advisor, but I mean, it's really up to you. And I know I'm not giving you much to go on, Randall, but
I,
go
I
ahead,
think
Trent.
one of the things to take account is know your company. If you go and dig into this contract they just recently signed with Microsoft, number one, it's a contract. There's no exchange of money yet, so nothing has hit their
Books.
P&L or their balance sheet. There are a lot of stipulations in there that Iran has to meet to get paid. So those are things like when you see these big contracts, what's in the contract? What is in the agreement? And one of the biggest stipulations for them is to be, I'm going to get this wrong, but they have a requirement to provide 200 megawatts of energy or data to Microsoft. I think that if I interpreted that right, that means they have to be able to provide the level of demand of that level of 200 megawatts, I believe, of data processing to Microsoft. If they don't, they get deducted from what they get paid. So that is a variable that you need to factor into your risk model when you look at these companies, your fundamentals. The other thing is the thing is just skyrocketed since what, a year ago? I mean, it's cipher mining is another prime example of this. Just a mega hockey stick move higher. Um, this could just simply be a deleveraging and taking profits.
Well, I think it's hard, and I've done it before in my investment life, got behind 20% or 10%. You say, well, if I just get back to even, I'm going to get out. And then it's 20%, then it's 30%, and then you just feel horrible. And that forced me to get into a trading plan or an investment plan that says when I get into something, when is enough, and whether it's a trailing stop or it's a moving average like the 200, like I did with IBIT, it takes the emotion out. And if it pops up above it, I don't worry about it. Too many people, oh, I should have stayed in or I should have got out. Well, if you have a plan, it makes you do that. And 30%, 20%, 10%, you got to decide on your own what your risk is. And, some people will trade or invest with a 10% stop on the bottom. I use 2% on my trades, okay, because I don't like losing more than 2. And I tend not to trade the highly variable, volatile, stocks. I don't trade a lot of the AI stocks or the Mag 7s. I don't. And so, okay, I probably gave up some yield. That's fine, but I can trade. We did Westinghouse once and we made 30% on Westinghouse. Okay, so that was a home run. I don't see those very often, but, trading's different. But I would say, it's really up to you, Randall. I'm sorry you're down 30%. But from this exercise, I would say on the next things that I invest in, once I know if I'm investing or trading, number one, and have a plan for each. I have my trading plan in the Discord. If you're investing, like know the company, know what Kerry, go use his resources and know the company, know why you get in. If you get in sometimes on these high runners and they just get out above beyond their skis and their valuations are too high. And the market will see that and the logarithms will see that. And then all of a sudden you're down 20%. If you don't have a stop in and you don't have some type of downward protection, you get caught up in that. So I don't think I answered your question, but it's hard for me to tell you what to do in this situation. But I've been there before. I've taken those losses, and if I take those losses, I try to learn from it. Sometimes I try to hang in there and let it go, but 30% could take a while to get back, so it's really up to you and your situation and how much you got invested and how much you know about the company. I don't know all that much about it. I don't study Iran that much, but anyway, that's my answer, and I hope that's helpful, and I hope you make a decision that's good for
Hey,
you.
Mark,
Yeah.
can I show a chart of Iran? Because I can give you a option pricing where they're putting in
Can I do
support levels.
one
Yeah,
more real
sure.
quick chart and then I'll get out. Someone wanted SoFi. And here's
Yeah.
SoFi, and it looks a lot like kind of Iran, it kind of took this nice run up. And now we're down below the 50. Okay, and the 50 has been a nice source of support. It's all the way back to the end of September, and so if we cannot sustainably get past that 50, we've got a level of resistance here, we could see more downward. So we got to get above that 50 and roll back up. But right now I'm looking at oscillators that are moving the negative direction. And I'm also seeing, resistance right here. We've been playing sideways on SoFi. So, as a trade, I'd be out of it as a trade. As an investment, depends on where I got in. If I use the 50 or the 200, you're still doing okay, except for the 50. You got to be making a decision now on the 50. If you're in the 200, you got some time to make that decision. So, and I'll go look at some more, and I'll let Trent go and pull up Iran, and we can look at his options.
Yeah, so this is Iran, and this is where market makers are placing their hedges, their support levels and resistance levels. As you can see here, we broke through 52. I shortened my time frame on this. Typically, I go with a monthly outlook of where they're pricing this stuff on a 30-day basis. I shrunk it to basically 2 weeks, so it's a more volatile. It gives you a different positioning. And where I see today, you saw yesterday, Friday, it came down to the 45 mark, which is a second tier or second level put wall. This is the second level of where they're putting in put positions. Yesterday, it came off that, hit it again, came off that. So 45 is on a short-term basis is one level. You get in to this red area below 45, 42 is your next biggest level, and then your third level is 40. What needs to happen is this stock has to break above 52. This is where they go from right now. If this stock were to move higher, their market makers positioning would be to buy into Iran. If it goes up, they accelerate the volatility in it on an upward basis. If it hits 52, then they basically start to neutralize. So they try to neutralize their volatility. Whereas right now they're selling in and have been since back here on November 6th. They've been selling into this downtrend, which has accelerated it downward. So from a very short-term perspective, take into account your support levels are at 45 and 42. If we see a move higher above, say, the intermediate trend line here and a move towards 52, that could be a bullish sign. But we have to break above 52 and then 54 and then 60 and then 65. But right now, take into account, if you broaden out what is happening in the technology sector. You have a downward trending, a pulling of money out of the market, out of technology. You have a downward trend. So start with your sector. What direction is the sector going? And then break it down to the companies within it. And right now, what this is telling me is you may have found support at 65. There is a good chance it'll be at 42. If those things can hold up, then you could see a potential shift in the momentum from downward to upward, and then 52 becomes your resistance level at that point. So as you're hopefully get some gain back in your position, start to look at it and go, okay, where is it likely to top out, and should I take some off the table? Please do not trade or invest based on the four-letter word HOPE. It will burn you every time. So trade with a strategy, look at the positioning, look at where you're at, and go, How much more can I lose before I bleed out? Start from there and
Hope
then
is not
follow
a
the
strategy.
resistance. Hope is not a stretch. It's the best
Yeah.
line out of what was it? Mark Wahlberg said it in God, it was about the deep horizon.
Oh, deep rising, yeah. Yeah.
Yeah. Anyhow, but keep that in mind. Cipher mining, similar situation. It We talked about that in July. It was in the sevens. It just went through the roof into the 20s. It's now in the 14s. Same thing. Major momentum. Look for support resistance. Where's this going to hold up?
Okay. TU, we got a question on TU. Here's the year-to-date chart on TU. And you can see where support is right here on this intermediate support. You could have gotten into TU on January 17th, gone up, I mean, and come back down. And by March 21st, if you're a long-term holder, you'd be right back to where you were. Then you came up again, and then in April, you're back to where you were. And if you're still a long-term holder, you went all the way until today, and you're back to where you were back here in January. So this is why, you know, when you're trading or investing, you try to figure out, I mean, here's the 50, here's the 200, and we're below both of them. You have a death cross, which means the 50 crossed over to the negative side of the 200. Now we've come back down to a level of support almost. Now we open below it. You can see where we open. The oscillators don't look good. You know, we'll see if it can come back up and go sideways and maybe get into a swing trade situation here. We do have history, like I just showed, you know, where there is some support at this level. But right now we've gone below it, and we've done that before. So again, you know, this is not something I would buy into until I saw that more of a swing up and the oscillators move in the right direction on TU. And it's below the 200 and it's below the 50, which are considered very bearish. You're in at 68.12. Okay, on TU. Is that TU you're in on? So now we're at the, no, maybe that's not TU. Oh, I ran 68.12. I ran. Okay. All right. Iran's based on Bitcoin. Bitcoin goes back up, so Iran potentially Iran's also
And see the
into the
chart.
AI, into the AI, right? I don't have a chart up.
Oh, okay.
Yeah,
Yeah,
because it's
Iran's
8:30.
making the conversion to data center, and that's the deal they have with Microsoft. As Microsoft builds out their data centers, which is going to take probably 3 to 5 years, they're basically renting server space from Iran. That's part of that deal that they made. I think it's like a $9 billion deal. Um, so that conversion from Bitcoin mining as well. One of the things, and I pointed this out in comparison between Iran and Cipher mining, is the difference there is they're both making this conversion. But Cipher mining holds a lot of their Bitcoin they mine in their treasury, whereas Iran sells it off to build out. So to me, that was like, okay, that could be you can look at it in two different ways, but that could be a yellow flag with some of these companies. Yeah. All
Okay.
right.
Well, I guess we got another 2 days still in the video. We'll see what happens.
Yeah. No, they come out tomorrow.
That's what I said. Well, we got to go through today. They
Oh,
come
yeah,
out
that's
tomorrow.
right.
They come out tomorrow after the bell. So we got 2
That's
days of
true.
trading left. So
Yeah, and that'll be interesting. Watch the last hour of the day trading with Nvidia, because that could be it. It could be telling us something else, because somebody knows something. Somebody has a inside thing. Okay, we'll wrap it up there. One last thing. If you're trying to go through the website, we are having problems because of this Cloudflare crash. I just got a text from somebody who sent me a picture of the error report they got, and it is Boston. Cloudflare's, I guess, data center or whatever in Boston is out as well as Atlanta is, and a couple of these others. So this is not just us. This is across the board. So be careful. Watch Cloudflare's symbol is NET. Um, and it's only down 3% today. That's interesting.
Was that the same one that caused all the airlines a year or two ago to go down? You know, Delta and all that?
You know, I want to say yes. Who's the other one? Palo Alto Networks? Is that it?
They're doing good. They're doing okay.
Was that Willie?
Oh, sorry, sorry. I didn't know it was on. Sorry.
It's all right. Um, it was one of those cyber companies. It was the airlines that went out. I think it was American
Right.
Airlines. Was the
CrowdStrike.
big one.
And Delta. Who was it?
CrowdStrike.
CrowdStrike. That's it. Yep.
Yeah.
Yep.
So interesting. All right, we'll wrap it up there. Have a great morning and afternoon. We will be back here tomorrow. Determine how much you can lose before the dreams get interrupted.
Well, determine how much you want to profit, and and don't lose it if you don't have to.
Yeah,
Just as
exactly.
you're wrapping, up, if you don't mind, just a very quick question, if you don't mind. So,
Sure.
what do you guys think? Do you guys think it's still good to begin to load in on some Bitcoin while it's going down, or wait a little bit more?
I didn't catch the question. Did you, Trent?
I did.
He
Can
asked
you
if
repeat that,
you
Willie?
buy Bitcoin right now, or are they going to go down a little bit more?
Well, I wish I had the knowledge of where things are going to go, because I don't make predictions. I just look at charts, and let me pull one up real quick for you, Willie. And I just make inferences about what I see. Here's Bitcoin. Okay, it's trending down. Okay, so it's up a little, 92. I was telling Bob the other day, 92, 93 was kind of my limit, and didn't go to 90 and whatever. It's if it can hold that, you might be able to see it pop up. But again, look, Bollinger Band's down, your oscillators are still down. The nice thing is we flattened out a little because we had to on stochastic, and the RSI is at 28. Okay, so maybe we'll see on a chart that's going to head back up, but this chart doesn't tell me to buy, Willie, right now. It tells me there could be some more pain. I do like if it can go sideways a little bit and then head back up, but it hasn't done that yet. So, if you're looking to buy, for me personally, just follow my guidelines. This does not tell me to buy. I mean, you ask those questions, and I want to teach you to look at kind of like charts and see why I'm seeing this, and that you can see the same thing I'm seeing. And until we see that kind of loop back up, and I'm just going to move over to a chart that we looked at last Friday, where you see this come
I don't
down.
see the same thing you see, Mark. I see 50,000. That's what I see.
Well, the chart doesn't tell me that. The chart tells me.
Chart doesn't tell you 80,000 either.
So what you're telling me is you're just guessing, basically.
No.
Yeah, based on what?
I just know the history of Bitcoin and the way it operates.
Well,
and, it's continue every day. It's just working its way down. And when the market, we're in a bubble, right? Or we're not in a bubble. Some say we can't say that, but my opinion, we are in a bubble, and we're correcting, and we're going down. And so is Bitcoin going to continue down? Yeah, I understand that the market conditions are different than they were 5 years ago, right? We have big players in there. They're also going to drag it down too. And you have, like I said yesterday, you have all the miners selling, okay? Because they need as much yield out of these coins that they can get to pay for their overhead and their profits. So the Maras of the world and all the rest of them that make Bitcoin are selling. And that's what's pressuring it down on top of, wait a minute, let me finish. On top of the margin calls that the guys are using to buy it on margin, which really hasn't hit hard yet. That you will see, and you'll see the spike down when that really starts to trip.
well,
That's
we're down.
continuing.
We're down.
But
Thank you guys so much.
that's
We're
my
down
thing.
25% right now, so we're in a bear market. You can see it on the weekly
Yeah,
chart.
we're in bad, but
Okay,
Bitcoin's
so-
different. The Bitcoin is different.
So yeah, it used to be kind of until it got industrialized with the ETFs and such. To make a prediction it's going to 50, I can't justify that. You can, I can't. Okay, um, I don't think it's going to go to 50. Okay, I look at the chart and I say, we got some resistance here in the 80s. We got some resistance where we are right now. Okay, we'll see. Okay, this is a monthly chart. Okay, or weekly chart. Sorry, no, monthly, weekly. Sorry, weekly. So, we'll see, Bob. But if Bitcoin does, so does the equities market.
I'm not saying you're wrong. I'm just saying that my prediction is based upon what I've seen in the past, okay, with Bitcoin. And I've watched these guys play this thing. And yeah, the conditions are different, but it's still not going to stop it. It happened, like I pointed out several months ago, where it spiked down to 70s, right? That same thing's going to happen again. And the big guys they're in the ballpark.
Well, we'll see.
Yeah.
We'll see.
It doesn't mean that you're wrong or I'm wrong. It's just my prediction of what's going to happen with Bitcoin. And I have a couple of buys in for it down there. So I'm going to wait and see.
Okay. That's
If
good.
it
That's
happens,
fair.
it happens. It don't happen, it don't happen. Simple as that.
That's fair. But that's a long way down. That's another 40,000 down or
But it
30,000.
has a history of doing that.
Well, I think we've already gone down 25%. I don't think we're going to hit down. I don't think we're going to do that, but we'll see.
All
Okay.
right.
We'll see. But his question was, should I buy it here? And I'm just telling you right now, from my point of view, the chart does not tell me. Clement, what's up?
My son asked me the same question. I said no.
Oh, the look in the chat, right?
Hold on.
Yeah.
Trent, can you tell us next time about your new tool? You have a new tool? Sounds personal to me, but go ahead.
You
Tell
get
us
to
about your
this
new
age,
tool.
Mark. You get to this age, Mark, you need all the assistance you can get.
You tell
I will hold on one second.
You have a new tool? What kind of tool you have?
Well, I'm about to show you, Bob. Be patient.
Oh wow, you're holding out on us.
So I've talked about this for a bit. Kerry gets inundated with stock ideas. And what we want to do with this is total beta 1 version. There's some mistakes in it. There's some things we're always showing up that I'm trying to figure out why they're doing it. But basically you come to this page and I put it in the Discord in my office, but I'm going to make a sort of a channel in the Platinum as well as a button on the menu on the website once it comes back up that you can go to this. But basically you enter your stock. Let's use net. You put in your name, your email address, gmail.com. If you don't want the results sent to you, you can click here, no marketing, and then hit submit stock idea. And it takes a minute to process. And then it comes up with an answer and says, thank you for submitting, blah, blah, blah. So it gives you a price, the name of the company, the sector, the industry, software, infrastructure, and did it pass the rule of 40? And the answer is no, it didn't. It was at 26.81. Now, does that mean we don't look at it? No, it just means we sort of put it as a priority 2 kind of level. And you can submit another stock, do it here, and the results here show up. Now, I'm working on this side, the recently submitted side, to update after you've submitted. It hasn't, so I've got to reload it, refresh the page here, and as you can see, it lists net Cloudflare here. So there are little things that a couple of you have submitted stuff that have been sort of suspect, like why does it have a negative 227.72 rule of 40? I don't know, so I'm gonna go figure that out. AEHR was another one. It was submitted last night. See if I can find it here. Anyways, oh, here, 5,721.56. How the hell? What's the question? So, like I said, this is a beta version. I'm gonna put it on the Discord. It'll be his own channel, where you can submit this stuff. This is a 3-phase screening process. So first is Kerry's rule of 40. Did it meet that? If it met that, so see, for instance, PPSI met the rule of 40, 88.29. The next phase is I'm building to accompany this will be a second level screening. So you'll get into a couple of the financials, the rate of change, and all that. If it passes that level, then we will then put it through Kerry's Samantha in a full deep dive, full report, as well as a podcast with Samantha and Bard as well. So this is the first layer. I've been working on this for a week. Very proud of where we've gotten with it, or where I've gotten with it. So what I need from you all, and I've had some great suggestions from other people, but you can post those suggestions on the Discord, as well as just drop me a text and say, hey, here's my thoughts on this. Here's the mistakes, or here's what I think would be really cool if you could add this. But I want to keep this simple, straightforward, and very user friendly. So check it out. I put a link in the chat earlier in the conversation today, but I will also post this out, and I'll also drop an email out to you all later this afternoon as well. So please try to break it. Tell me what's wrong with it. It's the only way I'm going to make it better. So that's it. That's my new tool, Bob.
All right. I'll check
Wasn't
it
what I was
out.
expecting, but it looks cool.
We'll give you our feedback on the results. They make sense.
All right,
What's that?
I said, we'll give you our feedback on the results if they make sense.
Yeah. Yeah. And I appreciate that, because this first phase is very simple screening based on Kerry's first steps in the Rule 40, but everything can always be tweaked. Everything can always be upgraded. And that's the whole goal of everything we're building. I want to get to a point where you enter a stock into the stock analyzer. It gives you the Rule 40. If it passes, then there's a link where you can click that link and it goes to the second screening. If it passes that second screening, and you can see that data, and then a full report. What's that? You're welcome.
Hang on a second.
Thanks for pointing that out. All right. I'm excited about this. This is my AI play. So anyhow, all right, we'll leave it there. Have a great morning and afternoon. Please be safe. Remember, preserve, protect, grow. That's the theme for the rest of the year.
Thank you
Thank you
guys
all.
so much.
see you guys.
Thank you.
Thanks,
Y'all take
thanks.
care.
Thank you. Bye.
Yep. Live loud.
Bye.
Peace.